Welcome to the Market Outlook video presented by MarketScholars.com. I'm your host, Brandon Van Zee. It's September 28th, 2023. First of all, if you're new, welcome aboard. Remember to go over to YouTube, click subscribe on our channel, then go down below into the description area. Make sure you're signed up for our email distribution list, so that way you can be notified whenever we post these videos. You'll also see which stocks are giving you overbought and oversold cluster signals within the S&P 500 at the bottom of those emails. And some of you saw my email to you on Tuesday, and we had 110 out of the 500 stocks in the S&P 500 with oversold cluster signals. So we are getting some pretty extreme signals here recently. Anyway, we are also big users of X, formerly known as Twitter. If you're not doing so already, I would encourage you to follow me at Brandon Van Zee. We really appreciate those of you that click like on those posts. And then last but not least, we do have a presence on Facebook. Feel free to join our group at that web address you see in the logo in front of you. All right, let's go ahead and jump into today's trade activity. And as we get started here, just a quick little heads up. Looks like we got to 94 likes the last time I did the video. As I always say, if we're at 100 or more, I'm more than happy to give you a full hour-long version of the video. On the other hand, I want to give you the opportunity to have shorter videos as well. And if we're under 100 likes, then we'll keep it short and sweet. So today will be one of those short and sweet ones, but just in case you were wondering how close we are, right? Only 6 likes away from that, and some of you might be thinking, well, somebody else will click like for me. Remember, each one of you has that opportunity, and each one of your likes truly does count. So I haven't been in that habit lately. We would encourage you to do that. Remember, look for that little widget that has the X in it underneath the video that you're watching on our website, or just go over to our timelines on Twitter, and you'll see it pinned to the top of our timeline. Let's go ahead and take a look at our heat map here for the S&P 500. This particular heat map comes from FinViz, and as you can see, it was a pretty healthy day. Green pretty much across the board. There was one major exception, and that was utilities. Utilities have been really out of favor. They hit fresh multi-month lows here today. And you can see nearly every single utility in the S&P 500. In fact, I do think it is every single one was down today on a day when the market itself was up, over 0.5%, which is a pretty solid day for it. So there's been some interesting developments within the utility space. You can see right here that NEE was down 4.8% today, and that follows a very ugly day yesterday as well. That is a dividend aristocrat, and one that has been peculiarly low yield over the years. Usually had a yield of only like 2%, when most other utilities had yields of like 3.5% to 4%. So, it's kind of been interesting to watch how that phenomenon has been washed away in just a couple of days. Story behind the scenes is they have a kind of a sister company. It's their master limited partnership, ticker symbol NEP, which you don't see here because it's not in the S&P 500. But that particular security has been issuing some bad news and some cuts in its distribution growth guidance in the future. And so that has kind of flowed over to NEE, just kind of in sympathy. That other company, NEP, also was a company that would buy a lot of assets from NEE, and that was one of their growth drivers over the years. So that company has been hit hard. That is one of the rare dividend aristocrats we haven't really looked at in my classes, but I have a feeling that's going to change here perhaps as early as next week, as we finally get an opportunity, as we've waited patiently all these years for it to come down, and it finally did. It's joining the rest of the utilities in this malaise that we found ourselves here in 2023, especially with those interest rate sensitive assets. By the way, interest rates hit yet another decade plus high here today before closing a little bit lower, but on an intraday basis, you'd have to go back beyond 10 years since the last time you saw interest rates as high as they are right now, and that is a continued concern for most of these utilities. Anyway, beyond the utilities, we did have mostly green out there. We had a couple of one-off stories. Boeing was a little bit of a challenge there. That kind of flowed through to RTX. I actually spent quite a bit of time talking about RTX in my question and answer session. So if you're looking for additional content from me tonight and you're a premium member, I do have that 3.5-hour class where you can listen to my analysis on a number of stocks, including RTX. So feel free to check that out after you're done watching this. Some of the healthcare stocks were out of favor. Eli Lilly was out of favor. AbbVie was down a little bit. We actually still have a bearish trade on AbbVie. Haven't been doing all that well on it, but today was a day where it was down down when the rest of the market was up, so we'll take it. And then some of the consumer staples were down a bit as well. Some of the big ones like Procter & Gamble, Coca-Cola. We had Keurig Dr. Pepper also down a bit there. And then off onto the left-hand side here, a couple of tech stocks do stand out, including Micron, which I believe reported earnings yesterday, if I'm not mistaken. So they were down 4.4% today. Accenture, I believe, reported earnings this morning. In addition to that, they also reported yet another stellar dividend growth, a dividend increase. Some of you saw my tweet here just a moment ago about that company. It's one that doesn't get talked about a whole lot, but their dividend growth since 2006 has been incredible. And so still not the biggest yield in the world, but I don't think they really get the credit for the type of dividend growth that they had produced over the years. But for today, market didn't really like what it saw out of its earnings report, and the stock was down by more than 4% here today. On the plus side of the ledger, fortunately, most of the other stocks were up, including, it looks like, all of the Magnificent Seven. Tesla was up 2.44% as the largest winner within the Magnificent Seven. Then came Meta, up 2.09%. Then came NVIDIA, up 1.46%. Then Google, up 1.27%. Then Microsoft, up 0.27%. Apple, up 0.15%. And Amazon, I guess technically it wasn't up, but it actually wasn't down either. It apparently was exactly flat, if we are to believe what we see right here. So it was up earlier in the session, I know that, but it looks like maybe it had a little bit of a sell-off there into the close, and closed exactly where it closed yesterday. So for the most part, a pretty good day there out of the mega cap tech and Magnificent Seven areas of the market. In terms of other areas that catch the eye with some of the brighter greens out there, I would say that with the exception of the aforementioned Micron and Accenture, technology had a really good day, right? A lot of these semiconductor companies up nicely. A lot of the semiconductor equipment companies up nicely. Even a number of the software names were doing pretty well here today. And, security, internet security plays and different things like that, Palo Alto Networks and the like. So pretty strong day, pretty much across the board in technology there. Also had a pretty strong day in consumer discretionary. Airbnb up, Marriott was up, Hilton was up, so the travel theme seemed to be back, at least here for the day. And then we had some pretty good activity there in the medical devices, Abbott Labs, Stryker, Boston Scientific, all strong performances there. So I would say this is a pretty positive day. Obviously, the month of September has been very ugly, and therefore getting a little bit of a boost as we try to close things out here. Of course, tomorrow will be the final trading day of September, and then we'll kick off October next week. And by the way, some of you saw this on the Telegram, but in case you didn't, I'll mention it here as well. There was a trade that I had done a couple of months ago. It was a sold put on Kellogg. That trade is still in reasonably good shape. It hasn't gone in the money or anything like that, but I did close that out early today because that company is going to go through their ex-dividend date for their reorganization, where they're spinning off their cereal division next week. So if you don't want to participate in what could be a confusing situation there with your options contracts, you might be also incentivized to shut your trade down, as I did today. We didn't make any money on that trade. We didn't lose any either. Oddly enough, we actually closed the trade exactly where we opened it, so it was kind of a non-event in the end. But for those of you that are comfortable with, owning perhaps both of those spun-off companies, or perhaps having a little bit of a strange division between your options contracts, it still hasn't crossed into the money, so you still could be good to go on it. But for my purposes, I just shut it down just because I didn't want the confusion after that, and I can always reevaluate that particular security after that. So tomorrow's your last day to do that, is the point. So for those of you that weren't aware, that came out here, and we talked a lot about it in my question and answer session, as a matter of fact. So if you're a premium member, feel free to listen to that portion of that class as well. All right, let's go ahead and pop on over here to the main part of the platform. and wanted to take a look at the specific breadth numbers. Today in the S&P 500, 375 stocks out of the 500 closed higher. So that was basically 75%, right? 3/4 of the market closed in the green today. So pretty strong day. We got a long ways to go. There's a lot of negative days that we need to make up, but hey, we'll start somewhere. And what was interesting about it as we look at our foregrid here now is that when I was in class yesterday, with those of you that were in my factor-based swing trading class, I was pointing out to you in the morning that the S&P 500 had an oversold cluster signal. And I was saying how interesting that it was actually the very first one in the last 3 months, despite all the selling and what feels like a little bit more volatility lately. We haven't actually had any oversold cluster signals in the S&P 500. We've had it on plenty of the stocks in the S&P 500, but on the index itself, we have not had it. Well, wouldn't you know that here's yesterday's candle, and in the morning when we were trading near the lows of that candle, all three of those colored lines were in the lower reversal zone, and at that exact moment, we had an oversold cluster signal. You can check the tape because, of course, all of our classes are recorded. But what's interesting is that by the end of yesterday, we had a bit of a rally into the close, and it took away that condition of an oversold cluster signal. But point of me bringing this up is it's not entirely surprising to me to see the market up today, because while you don't physically see the oversold cluster signal, we know that from a psychology perspective, it was present yesterday, and gives us a sense of just how extreme the selling has been here recently. So today we have a little bit of a close above the high of the low day, kind of a hold pattern there. Whether it turns into anything, anybody's guess here. Obviously, it's been kind of tough sledding here more recently, but at least there's some hope and optimism as we kind of turn the page onto the new month of October. Remember, October is oftentimes known as a bit of a mixed month where you have a bit of selling, especially in the earlier half of the month. And some of the biggest market crashes have happened in October as well, so they kind of have that reputation. But oddly enough, you will also find that throughout history, typically it's October where the new bull market could emerge. In other words, stocks stop getting sold off in October at some point along the way and then start making a new leg higher once again. So maybe, just maybe, we'll have some seasonality to help support stock price action as we head towards the end of the year. But today, S&P 500 was up 0.59%. We still have the strongly bearish intermediate posture. We're still trading below the falling 30-day moving average. The Dow Jones was today's worst performer of these four. It was still up, but only up 0.35%. Of course, a stock like Boeing was probably one of the reasons behind that, is that was one of the stocks that was down today. I did notice Chevron was down a little bit and IBM as well. So there were a few of them there. But today was not the Dow's day. Nonetheless, finished a little bit higher. We do still have the strongly bearish posture, and it's below its falling 30-day moving average in that case as well. The NASDAQ composite was up 0.83% today, so better than the S&P 500. And of course, I think that makes sense given what I saw with all those tech stocks on our heat map. There's a little bit more of an impact on the NASDAQ when you have a big up day for tech stocks. And here we had another, close above the high of the low day formation. But we still have that strongly bearish posture and trading below the 30-day moving average, which is falling. And then last but not least, Russell 2000 was up 0.87%, which was our best performer of the day. But remember, the Russell was the one that has been producing these official oversold cluster signals that ended the day with it, not just in an intraday basis like we saw with the S&P 500 yesterday. So we're kind of waiting for some sort of a reversion to the mean move there on the Russell 2000. Maybe this will get us cooking a little bit to the upside there. It remains with a strongly bearish posture and is trading below its falling 30-day moving average there as well. I've only got about another minute here, but I did want to quickly take a look at one of these 12 grids because I know a lot of people's mindsets have been what's going on with the interest rate environment. And I did want to point this out to you real quick because maybe it provides a little bit of optimism. We shall see. But here is TNX, and it hit yet another multi-year, actually more than a decade high on an intraday basis. But notice that it ended the day with a long upper shadow and basically closed at the lows of the session. Usually that is perceived more bearishly, especially up here at an extended part of the chart like we're in right now. This has been one of the big concerns of the entire stock market is that when interest rates keep going up, there's less and less profit-making ability with corporate USA. So maybe, just maybe, we're due for a little bit of a pullback there with TNX, the 10-year Treasury yield. You can see in response to that, TLT, the long bond, was up a little bit here today after 3 consecutive oversold cluster signals. You even had that high yield bonds had a bullish engulfing candle after 2 in a row of oversold cluster signals there as well. In addition to that, we had the US dollar down just a touch today as well. So it didn't change those postures, but at least we finally had some selling in those areas that have been the concern of the stock market here more recently. All right, that's my 15 minutes. If you want to get me back on track with the hour-long presentations to kind of air out these concepts a bit more, all I ask out of you is 5 seconds out of your time. Click like for me there on Twitter, and we'll see where we stand when I'm next scheduled to do the video again on Tuesday. But David should be back with you with his weekend edition here as well, so stay tuned for that. All right, until next time, I want to wish you all the best of success with your trades and your investments. Goodbye for now.